Hello and welcome to this episode of Econ Talk Kickstart 2023. I'm Lily Lu in Beijing. As China walks out of the shadow of the COVID-19 pandemic, governments at all levels have wasted no time in rebooting all sectors of the economy. Policies are in place to attract investment and talents and boost consumption. Taxation and other incentive measures are taken to help pandemic-battered companies to get back on track. And there's a lot more. The International Monetary Fund, in its latest estimation, raised its prediction for China's 2023 GDP by 0.8% to 5.2%. So that means it expects China's economic output to account for 30% of the total global growth this year. And in today's session, we'll look at how these economic policies are panning out and what the path of China's economic rebound look like and how it will cross and interact with the global recovery trajectory. Now, let me introduce to you our guests of the hour. Let me start with Mr. Yao, Secretary General of the CCPIT Commercial Sub-council. Welcome to the show, Mr. Yao. And Mr. Hu Wei, President and Chief Executive Officer, Bank of China USA, and Chairman of China General Chamber of Commerce USA. Welcome to the show, Mr. Hu.
Hi.
And Mr. Zhang Ning, as always, nice to have you on our show. He is the Senior China Economist at UBS. Thank you very much, gentlemen. You're joining us from Beijing and Hong Kong and New York. Thank you for working with us from different time zones. And I think the reason that you would get up early or stay a bit late today to talk with us is that we all believe how important is China's economic momentum to the world. So the Chinese economy actually, and the capital markets as well, got off to a pretty positive start for this year, with the Spring Festival holiday picking up consumption, and the stock markets also had a pretty bullish opening of the year. In the meantime, we're seeing the Chinese currency exchange rate rising. The market confidence seems to be picking up. So let me start with Mr. Zhang Ning. Looking forward to the whole year, what would be the outlook for the rest of the year? What is your estimation of the first, let's say, Q1 growth? And also, what will be the main growth drivers?
Thank you, Lily. Thanks for having me here. So basically this year, we believe China will enjoy a very decent rebound for growth momentum from last year, quite a weak 3% growth, to this year, possibly 5% or even higher. And in particular, if you look at China versus other economies, China now is trending up, that's for sure. But other economies, unfortunately, they may slow down a little bit, including the US, Europe, and some EMs. So that's why the relative attractiveness of China has increased a lot, which explained a lot about the positive momentum of the investor sentiment and also even for the financial markets performance. So looking forward for this year, we believe the growth rebound of China will be underpinned by three components. The first one is China's very rapid reopening, which could underpin a significant rebound of consumption, especially for services and offline activities. So these all activities have been weighed down very sharply by last year's tight COVID restrictions, and now we can see the release of pandemic demand, and even people can spend, can consume. That's good, especially in the early stage of the reopening. And looking forward after maybe Q2, Q3, alongside with more household income improvement, together with the sentiment improvement, and even for the release of excess saving, which has accumulated in the past 3 years, could help further support China's household consumption as a whole. So that's a very important key pillar to support growth rebound, consumption, and reopening. And the second one is the less bad property downturn or stabilization of the property activities. We can see last year we suffered a sharpest property downturn in history, with the property sales declining by almost 30%, and even investment declined by 10%. Mm-hmm. And since last November, we saw a policy turnaround from the central government to support the sector, in particular, starting with supporting the developers' financing. Mm-hmm. And this year, the key focus will be on boosting home sales, boosting home purchase intention, which could lead to a less bad product sales numbers. For example, maybe in the next couple of months, we could see a stable product sales, and then alongside with a more stimulus on the way, and together with China's further reopening, we believe product sales could pick up sequentially from a very weak level, maybe around Q1. For the full year, possibly we still see a small decline of product sales in volume, but the sentiment rebound, sequential pickup will be quite positive, not only for the market, but also for the sentiment on the ground, and even for the contribution of the private sector to the economy as a whole. We think this much less bad property activities will be another key pillar to support growth rebound. And the third one, for sure, that will come from the policy support, which I believe will elaborate much more in later sessions. So basically speaking, from last year's Central Economic Conference, the key message here is to boost the economy, to turn more accommodative in many policy fronts, including the fiscal policy, credit policy, monetary policy, and even the regulation policies for internet, for the innovation, etc. So this kind of policy support will be another key booster for the growth rebound this year. But in particular, we can see clearly the government now has a big hope for the economy recovering by itself. And then the government may need to ensure a very friendly and so-called the accommodative policy environment to accelerate the pace of the recovery. We can see higher fiscal deficit and even stronger the issuance of special local government bonds, and also very decent ample liquidity condition, together with continued credit support for SMEs, innovations, green economy, etc. And in particular, last year, we have the very strong infrastructure investment, almost 12% growth last year. This year, possibly a small deceleration from last year's strong pace, but still, it's a very decent growth, maybe 5%, 6% growth. And we have continued support for the key projects in the new 5-year plan. And also some new infrastructure will receive more support, not only from the credit side, but also for the order and the government other favorable policies. So all three pillars are very important components which could support a decent rebound. And you can see we are facing some challenges, that's for sure. That's a slowing global demand. Exports will decline from last year's 7% growth. So that's why the government's policy support will be much more important than previous 3 years, when China enjoyed an outstanding export performance in 2021 and even last year. I stop here.
Yes, we're going to talk about the challenges as we move on. Now let me go to Mr. Yao Xing. I would like to get your take on the outlook for the year of 2023 and especially the first quarter. What do you think are the key drivers? Do you think that the IMF's 5.2% growth estimate is pretty much in line with your expectations? And also, Mr. Zhang Ning mentioned about the challenges from a global economic downturn. How do you think that might affect China's economic recovery?
I think at the beginning of this year, we have seen the rebounds of the various aspects of the economy. And I think that will be a good start for the recovery. And after the Spring Festival, almost all the provinces across the country have made arrangements for economic developments throughout the year. So I think the arrangements which are at a large scale and a high level shows the determination of the local governments to restore the economic growth and accommodate to the adjustment in the epidemic prevention policies and economic activities getting back to normal. I think that there is a reason to have confidence in China's economic outlook in this year, and the GDP growth rate will also be improved to a reasonable compared to the last year. And due to a set of reasons, China's economy encountered many difficulties in the past years, and the economic foundations was also damaged for a certain extent. But the recovery of the economy will needs some time, and I think the economy in the Q1 of this year will improve compared to the Q4 of last year. And after the economic foundation gradually restored in the Q2 and Q3, and I think the economy will speed up, the growth rate will increase significantly. And I think the several areas deserve attention this year. The first is the investment in the mega projects. Investment is still an important driving force to the economic development in many regions. It is relatively easy to recover. Increasing investment in the key areas and consolidating the supply chain are important for economic growth in the short and the long term. And the second is the recovery of the manufacturing industry. From the beginning of this year, a lot of the local governments have organized the merchants to go overseas to strive for orders. Besides, the industry also currently working on upgrading the technology and promoting the high quality development with high-end manufacturing. And the third is the recovery of the consumption. During the Spring Festival vacation, we can see the tourism, catering, and shopping showed some level of prosperity. And the pent-up demand was released. This is a good signal. And in addition, many provinces have listed the expansion of consumption as the focus of the New Year economy plan. And so we think we would expect the government's further measures to stimulate consumption in the future. And the fourth is stabilize the real estate industry. And we think the real estate industry is an important driving force to economic growth. Using the policy and the monetary tools to guide the industry to return to the right track, ensuring the residents' reasonable housing demands will inject impetus for economic development. So I will stop here. Thank you.
So both Mr. Yao Xing and Mr. Zhang Ning believe that the property market, as long as and also a boosting consumption, are among many of the key growth drivers of this year going forward. And then we touched upon the topic of a gloomy global outlook, which provides an uncertainty in the external environment for China, especially with trade. So let me go to Mr. Hu, who is an expert in this. Mr. Hu Wei, so the Chinese government has taken many initiatives and policies to encourage foreign trade from both the central and provincial government levels. What role do you think the government policies play in terms of boosting trade at this time, and what more can be done?
Lily, thank you for the question. I believe the question reminds me of the two keywords we have just shared during our China General Chamber of Commerce annual gala several weeks ago. The two keywords, I believe that's the same to the government. Number one, respect. Number two, resilience. In terms of the respect, we believe governments act as both a maker and the executor of foreign trade. And the foreign trade has set up defined local and global rules and laws. Sometimes these rules conflict with one another, but it is our sincere hope that the two governments can keep the channels of communication open at all levels, deepen the strategic mutual trust, resolve the tariff issues, find a compromise on industry subsidies, and finally remove all the investment barriers and export controls that only harm bilateral interests. Also, we believe China has continued to upgrade our regulations regarding the trade, environmental standards, the labor standards, and banking and security laws, and have worked tirelessly on building a market-oriented business environment governed by rule of law. These efforts will continue to contribute to a more open economy, which will promote the cross-border partnership, trade, and investment. When it comes to resilience, which is the biggest takeaway from the COVID area, we recognize that trade is just one piece of the value chain and the entire economic cycle. Resilience at the product and service level, coupled with the commitment to collaboration and transparency. They are all the key contributors to any successful trade relationship. To that end, we believe actually government should do more to support economic resilience, especially for our small and medium enterprises or SME, where the most support to enhance resilience is warranted from the government. Also, we are looking forward to more in-person trade promotion activities this year. And we believe that will be another important contributor to the cross-border trade and investment. Events such as the China International Import-Expo and the Canton Fair, as well as events organized by us, actually for the CGCC, for the Chinese investors at the select US summit and different events, that will help build strong bonds between two sides. We believe this official and unofficial business exchange will have business on both sides to learn more about each other's business environment and understand each other's market, which will do a great contribution to the trade and investment between the two sides, and especially for the China and the rest of the world. I will just stop here. Thank you.
Thank you very much, Mr. Hu. I will pick your mind later on down the show in terms of more topics on trade and especially China-US trade relations. For now, I would like to go to Mr. Zhang Ning again because let's stay with the topic of improving trade. So the external challenge is here. We all know about it. And what is it that we can do to increase our trade? I mean, we have seen some provincial merchants, they travel in a group abroad to Europe, to other countries to fight for more export orders. Is this one of the effective measures, and what kind of measures do you think is the right dose that we need to take right now?
Yeah, sure. So, the big story here is a global slowdown, which is kind of out of China's control. So we need to face it, and we need to cushion the shock from the external slowdown. So that's why the government may need to do several things. First one, of course, to facilitate the exports, not only for the custom clearing and also for the businessmen traveling overseas. They can easily travel and they can get the visa very easily, and also they could afford the traveling fees together with some maybe some credit support, etc. So traveling and communication is very important for businessmen, especially in the early stage of the reopening after 3-year pandemic shock. That's the first one. And the second one is a government's credit support for the trade. They may have a very large scale of some so-called inventory or even future orders. So they need credit support to make sure the orders could be delivered, even with some fluctuations from the elsewhere. So the trade credit is also important with a decent lower cost. That's the second one. And the third one is that they could deliver a new forms of the trade platforms. For example, the digital economy, and they can trade online, and also even they can do some related business with China's advantage in the digitalization, Alibaba, etc. So possibly it could be a new so-called high potential area we can develop. So that's the third one. And also the fourth one could be try to expand the new markets with China's quite a strong capacity in production. For example, the new new EVs in European economies, in the emerging markets, etc. So that could be much more helpful. And in particular, with the Belt and Road Initiative, we believe many neighboring countries, and including Africa countries, will the share of their imports from China will be trending up. For example, last year, ASEAN countries actually has been gaining more market shares in terms of the imports from China. So that's the fourth one. So make more friends, find more markets, and even exporting new products other than previously our low labor intensive, etc. So that's the fourth one. And also, we can do something more. For example, there's some so-called bilateral relationship in trade, imports and exports, which means we can encourage foreign development investment in China, and this kind of investment could lead to additional exports in the future. So that's a correlation, and also they can do better in both imports and exports, which could actually be better for the future. And eventually, the trade side, we need to handle the so-called the risk from FX. Mm-hmm. So the corporate side, they need some help from the banks or even from the government. They need to understand the risk, potentially from the foreign exchange rate, and they need to hedge the risk. So that's what I can learn from the previous experience and even other economies.
Mm-hmm. Very detailed explanation. You talked about the needs, not only for companies to going out, but also locally, what kind of support they need to have for those companies that are based on foreign trade businesses. Mr. Yao, what is your take on this question?
Okay, according to my observation, we find from the last year to the present, due to the inflation in developed economies, the central banks of the United States, Europe, and other regions have rapidly hiked the interest rate and gradually shrinks the size of their balance sheet, leading the concerns about a possible economic recession in the United States, Europe, and the world. So due to the shrinked demand in the major economies, ongoing trade frictions, and concerns about supply chain security, China's exports are facing challenge. But this situation, I think, will improve in the coming year. The first, in the long run, the foreign trade company should take the initiatives to upgrade their techniques, establish the competitive advantages, improve the product irreplaceability and the profit levels, and focus on the improving the customer loyalty and ROI. And in the short term, I think the local government, industry association, chamber of commerce, and the trade promotion organization can play a leading role in promoting the business communication, supporting the enterprises to participate in exhibitions abroad, and help the enterprises to participate, gain the export orders. And they could also support the enterprises to build international marketing system and overseas market information networks, improve the performance of their investment and understanding the overseas market, and therefore improve the operations efficiency. So, for example, I from the CCPIT Commercial Sub-council, that is a trade promotion organization, and now my organization has developed a plan for serving the enterprises in this year. And the projects including we will organize the business delegation to visit the Asian countries, and we will organize the International E-commerce Industry Expo, International the Beauty Expo. So such activities we will through such activities we will help the companies to obtain the overseas business information, expand the international connections, and demonstrate the products through the exhibition, and finally help them to obtain the orders. Yeah, so this is my organization. Thank you.
Okay, so with the help of different various organizations, we're also hoping that China's foreign trade businesses would have to mitigate through this time in a bit easier manner. In the meantime, we know that China is likewise attempting to attract foreign investment into the country as well. So, Mr. Zhang Ning, what measures do you think that China can take to attract greater foreign investment? I mean, first of all, we need to create a better foreign investment business environment from them, where China has been cutting short its, let's say, negative list over the years. China has been offering a lot of incentives and policies. What more can we do at this time when we are facing a global recession? What can we do to make China the most attractive place for investors?
Yes, thanks, Lily. So basically, the feature of China's rebound in this year could be a very positive one, which means that's a relative speaking, China is better than other economies in terms of the investment return, in particular in this year. But still, there are some long-term concerns over the investment in China, doing business in China, especially look at in the previous several years. There are some obstacles which has dampened the foreign investment decision in China. For example, there are at least three things. The first one, of course, is so-called access to China's market, which means, the negative list needs to be further narrowed down. And also, I believe, the market access for some local service sectors and even some high-end manufacturing sectors need to be opened further for foreign investors. So that's very important, access to China's business opportunities. I believe in the past several years, the negative list has been cut down notably, but they can do more. I believe the NDRC and even the central government are planning to do so. We could see some news in the future. That's the first one. And the second one is so-called, similarly to the private economies, the non-SOEs, the foreign investors and the private investors, they need the leveling of a playing field, which means they need to compete fairly with SOEs, and they need to get equal access to credit and even for the fiscal policy and the local government policies. So that's very important to restore their confidence. That's number two. And number three here is further to facilitate their money in and money out. Not only for the FDI, that's a long-term investment for sure. China has a very, very long experience of encouraging foreign investment in China in manufacturing in services, but also for the equity investment and the bond investment in the future, because the share of the foreign holding of China's financial market is only around 5%, which is much lower than other emerging markets, and not mentioning some developed economies. So that's why I believe the further encouragement for the portfolio investment into China will be also very important to restore the foreign investor sentiment as a whole. So that's my answer to this question.
Thank you very much. And speaking of trade and economic relations, one of the most important trade relationships in the world is the one between China and the United States. Let me go to Mr. Hu Wei. Mr. Hu Wei, despite the trade tensions between the two countries over the years, two-way trade still managed to set a new record in year 2022, reaching about $690 billion US. How do you think the two countries can put differences aside and further boost trade cooperation in this year?
Thank you, Lily. Actually, as you mentioned, although the trade conflicts between the two countries have been going on for more than 4 years, actually the trade continues to show steady growth. As of 2022, actually China is the third largest trading partner to the States, and also U.S. is also the third largest trading partner of China. So, and also we see actually enormous technological advances in green energy, healthcare, agriculture, telecommunications were all realized through the collaboration between the two sides over the past 40 years. That shows actually how deeply intertwined the two economies have become and how much wealth, savings, and poverty elevation that level of trade has brought to the world. So looking ahead, we believe actually the tariffs imposed by the U.S. on China's goods and export control can be removed. No doubt that bilateral trade will increase further. With that, American consumers can continue to enjoy the benefit of low cost and high competitiveness from Chinese product. And American companies can also enjoy the great benefits of China's tremendous market potential. So creating additional trade barriers will only exacerbate inflation and volatility in the market and promote exclusivity as opposed to inclusivity. Additionally, as China's approach to COVID-19 has evolved most recently, we fully expect to see more and more in-person dialogue and communication among different stakeholders and market players. That will serve as the backbone of the global relationships for decades and will definitely propel the trade relations between the two sides, especially for the China and the rest of the world. Also, in particular, we believe actually the service sector is the one we expect to see the greatest potential for collaboration and market growth between the two sides. After 3 years of lockdown throughout the world, we fully expect a substantial return of Chinese tourism and students to the US in the coming years. And also, we would like to see more cooperation in the areas of professional services and financial services between the two countries. And also, as Ms. Yao mentioned, actually, China's cross-border e-commerce is also another area that can further boost the trade between the two sides. As the most internationalized bank for China, and we Bank of China is always ready to make our contribution to that goal. All in all, we believe actually businesses prefer stability as to the markets. We sincerely hope that governments will find a compromise, resume high-level dialogue and in-person meetings, focus on areas of mutual benefit, and seek a healthy and stable bilateral relationship. The two businesses, along with our clients and consumers, together with the rest of the world, expect us to find a common ground from the society's greater good. So that's our expectation. Thank you.
Mr. Hu, what would be your piece of advice for a trade company in China that is doing businesses with a US partner?
Quite interesting topic. Maybe according to our understanding, our observations, several maybe recommendations for the companies that are looking for opportunities in the US. Number one, be prepared and well informed. So we would like to encourage our colleagues to work with fellow companies and professional service providers for risk planning and increasing resilience to the policy turbulence. Stay updated on the latest development and regulations related to the business and industry between the two sides. And also maintain compliance as a top priority and seek legal support to navigate potential legal challenges while meeting complex regulatory requirements. Number two, stay local while building synergies throughout the global network. We strongly encourage our colleagues to work together with your headquarters to generate an optimized localization strategies to better adapt to the US market. Foster your good relationship with local communities to better understand local business and political and economic environment. Last but not least, be proactive in building your strong brand in the local market. Companies who want to strive in the US need to continuously improve time and resources in your communities in which you operate, build trust from within the company, and extending that to your clients, to your customers, and along the entire industry value chain. You must be transparent in your communication effort and be proactive in sharing your company's stories in the media and on social media. We think the brand building is really another quite important thing if you want to succeed in the US market.
Well,
thank you.
Great advice, I guess. That's something that I guess our audience can take away. And also, let me go back to Mr. Yao Xing. Let's talk about the investment environment here. So this is actually when business chambers and councils can play a great role in assisting companies and help them to navigate through this time. So in a CCPIT survey, we saw that over 90% of the surveyed foreign companies say that they are satisfied with China's business environment. 9.78% of those foreign companies plan to increase the investment in China in 2022 Q4. So what is it that we can do to further help them to boost their confidence, to tell them that it is a right business decision to further increase their investment in China? What role can CCPIT play in this process?
Actually, in the last year, the FDI to China reached the 1.27 trillion Chinese yuan, and with a year-on-year growth of over the 6%. And the structure of the foreign investment continue to be optimized. This demonstrates that the foreign capital keeps confidence in the China's development perspectives. And from the direction of the capital flow, we find the 323.7 billion flows to the manufacturing industry with a year-on-year growth rate of 46.1% among this, and the FDI to the high-tech industry increased by the 28.3%, and the electronic and communication equipment manufacturing, and the scientific and technological assurance transformation services, and the information services all had high performance. So it is clear that the growth rate of the FDI in the manufacturing industry far exceed the overall level. And due to the upgrading the program, the attractiveness of the manufacturing industry to foreign capital keeps rising. And from the perspective of the investment sources, we find the South Korea, Germany, and the United Kingdom and the European Union have all increased their investment. So I see those developed economy still have the close ties with China's economy. And the upgrading program of China's manufacturing industry brings enormous value to the global supply chain, and that is a great attractiveness for the foreign capital. A number of the mega projects have started in fields such as the electric vehicles, energy storage, and power supplies. So this could help both the upstream and the downstream companies along the supply chain expand their business. And the report and we also find therefore the making efforts resolved around the industry upgrading, including the bring more scientific and technological outcomes to the entire supply chain, devising the more efficient industry policies and improving the foreign investment services could make the high-end manufacturing more attractive for the foreign capitals. So as the National Trade Promotion Organization, CCPIT has a long history of promoting the foreign investment. And this year, CCPIT consecutively released reports on the business environment for the foreign investment. And CCPIT, I think, can fully take advantage of its identity to strengthen the multi-level contact with the foreign capital and guide the foreign capital to connect with the potential partners, strengthen the communication with foreign-funded enterprise, report the problem encountered by FDI to government departments. And these measures not only introduce FDI, but help them clean up obstacles in the investment process so that the foreign capital can better achieve its goals. And in the future, we also could expect more trade facilitation policies and measures, such as the lowering the threshold of the foreign investment, opening more fields, aligning with the high-level international economic and trade rules, and stabilizing the foreign exchange rate. So the most important thing is to establish the consistent expectations. And so the capital market would have the confidence and feel safe about their investment decision in China. Yeah. So this is my observation. Thank you.
Mr. Yao, I know in your daily work you talk to businesses from both home and abroad all the time. What is it that you have been hearing from them lately with China's full reopening? What is it that they are excited about at the moment? And what kind of detailed support that they feel like they need at this time?
I think for this just I mentioned, because my organization now is responsible for to collect the comments, the suggestion from the foreign investor companies. So we were to help them to report the problem to the government, to help them to resolve the problem where they encountered in the business environment. And so this problem including the such as the government efficient and some about the talent policies, and also some how to say some measures related to the taxation. Yeah. So this is our observation. So thank you. Yeah.
Oh, great stuff. Thank you very much. And also, Mr. Hu, what role do you think the CGCC USA can play in bringing more opportunities to China's business arena?
Thank you, Lily. As the largest and most impactful nonprofit organization representing the Chinese enterprises in the U.S., CGCC USA is a mission to create value, generate economic growth, and enhance our cooperation between the U.S. and Chinese business communities. We promote constructive, result-oriented engagement and communication to minimize economic and investment barriers between the two sides. And we would like to help bring stability and transparency to the business environment and global markets. Specifically, CGCC USA plays a key role in the following areas. Number one, we serve as the critical communication bridge for accurate and up-to-date information. We host a variety of events and programs to help American and Chinese business connect. These programs center around various modules of the new normal in the areas of business regulations, cross-border trade and investment, strategies and developments, green economy, and cooperation communications, among others. Number two, we collect first-hand information that's including market data, company data, and provide valuable insight and experience sharing opportunities for the companies of both sides. We conduct extensive research projects that dive into the specific industries in order to share best practices, combat the misinformation, and enhance resilience to our members, so that actually we could help them to adapt to the evolving trend, new innovations, and a complicated regulatory environment. The latest example is our annual business survey report on Chinese enterprises in the U.S. We have done that for the past 10 years, and this will be 11 years. We will publish this report in the coming several months. The last, but maybe the most important part, we engage with local communities and foundations through diverse partnerships at federal, state, and local levels, including our partnership in China, such as CCPIT, Ms. Yao served. No different than other chambers of commerce and corporations, we are committed to social impact in investing and upholding the values of being a responsible corporate citizen. CGCC plays a unique role in amplifying the voice of our members by sharing countless stories of American and Chinese businesses working side by side, improving lives of our employees and local communities. Also, we have formed strategic partnerships with U.S. organizations that share a similar vision to enhance communications. That's another quite important area CGCC could play, especially in the U.S. market. Since the COVID, actually the amount of people-to-people interaction deteriorated significantly, which creates enormous gaps and allowing misinformation to flood the marketplace. And together with our members and our partners, we work tirelessly to create platforms for open and candid dialogues so that we can solve problems of today and avoid potential conflict of tomorrow. So for CGCC, we're really honored to serve that role, and we are looking forward to work together with our colleagues, both in the US and China, to make our contribution to the two sides trade, investment, and economic cooperation.
Mr. Hu, now with China's full reopening, do you expect that CGCC would have the receiving more, requests from Chinese businesses that are interested in doing businesses and get connected with the U.S. market?
Definitely, actually, we are seeing that trend. Actually, according to our survey last year, actually, 24% of our respondents answered that actually they have increased their investment in the U.S., which has been doubled compared with last year. So we are expecting, especially for the opening up after the COVID, we believe actually more and more opportunities will be there, and more Chinese investors or market players will play an important role in the Sino-US trade and economic relationships. Definitely, we are seeing that trend, and we are looking forward to more and more opportunities.
Oh, great stuff. And also, let me get back to Mr. Zhang Ning. Mr. Zhang, I would like to discuss with you on some more timely matters. First of all, I want to ask you about the impact on the Chinese economy and China's economic recovery, especially from this round of global central bank tightening especially the Fed's rate hikes. I know it's been tapering its pace a little bit now, but what's going to happen? What will be the impact on China's, let's say, currency, the trade sector, and the financial market?
Sure, Lily. So, all eyes are on the Fed next move. We believe, after the previous aggressive Fed rate hikes, there will be additional maybe 2 or 3 in the future. But now the interest rate in the U.S. has been super high, and the target, the goals to hike the rates are to tame the hyperinflation, and also try to minimize some potential risks. So that's why we may be close to some turning point in later this year, because first of all, the inflation in the U.S. is trending down, which has already peaked in end of last year. Now, various components, including the previous super high inflation components, cars, and other home appliances, are declining. And the other one is global energy prices are not as high as before. Also, the global supply chain bottleneck has eased a lot, close to the pre-COVID normal level. So everything, putting them all together, we can say, yes, inflation is trending down. But the question is how soon and how fast it can achieve the Fed's target. That's the first one. And the second one is that alongside with aggressive rate hike cycles, and also the hyperinflation has damaged the consumer power in the U.S. Also, the property market in the U.S. is on the downturn. So that's why you can see the U.S. economy is slowing down, and in particular, possibly the job market, which has been very resilient in the past several quarters, could turn ugly, possibly in the next couple of quarters. So put them all together. One is inflation, the other one is the job market. Possibly the Fed could stop the rate hike first, possibly around Q2, Q3, and then if the economy is turning much, much worse than expected, it's possible to see, the Fed eventually turn around to cut rates. The earliest timing could be maybe Q4 or even early next year. But the market has some debate over the timing and also over the pace of the future policy changes. So if you can see, if the Fed would like to continue hike the Fed rates maybe for the next couple of meetings, and it will still be kind of challenging for many other economies' currencies. But that's for the time being. The expectation now is being changed, which means everyone may discussing the potential turning around in the future. In the second half of this year or even next year, I believe alongside with the Fed rates maybe halting of the rate hikes or even starting to cut rates, the U.S. yields could trend down, which will be positive for many other economies, especially, the previously China enjoyed a positive yield spread between China versus U.S. And now it's a negative one. So in the future, if the U.S. rates, decline again, I believe that will be positive for China's currency or even for the so-called the capital flows. So that's the second one. And also, if the Fed decides to cut rates eventually, the sentiment, the risk aversion will be reduced, and some risk profile will pick up again, which will be positive for the financial market, also for the global investor sentiment.
Okay, and also, Mr. Zhang Ning, how would you assess the possible impact on China's economy from the recent earthquakes in Turkey and Syria?
The impact will be quite limited because the economic and the trade relationship between China and Turkey is quite small. So Turkey is not China's top destination of exports. But again, yes, the sentiment regarding the potential risk globally will be a little bit negative for China and also Chinese market, but it will transitory and also quite be limited.
All right, great stuff. Let me go back to Mr. Hu Wei. Mr. Hu Wei, so we were talking about the U.S. Fed's rate hike and that the U.S. economy is current status quo. You're in the U.S. and have you seen Chinese companies hesitating a little bit more with the current status of the U.S. economy? It looks like the economy was last year was being predicted of possibly entering a recession in a few years' time, and now the rate hikes and high inflation actually was going through the roof. Do you see Chinese companies hesitating a bit more about their business decision in the U.S., or do you still see much vitality in the exchange in between the countries, the business communities of the two countries?
I believe actually the key question here, actually, especially for the Chinese investors' appetite to the States, actually still the U.S. markets, the potential or the outlook of the U.S. economy. That's a key underlying factors to affect the impact, the decision of the Chinese investors. Several things actually, I partly agree with what Ms. Zhang has mentioned. Actually, currently, the U.S. economy seems to be at a later stage of the economic cycle, but still we are seeing a mixed picture. Some of the key characters actually a tight labor market, a slowdown in the economic growth, and the monetary tightening cycle approach to the end. We're not so sure where we are in the next couple of months. And also we see actually the financial conditions is tightening. So for the outlook of the U.S. market, especially for this year, maybe early next year, still chances, different chances. Maybe both of the soft landing or a mild recession are both possible. But we are still cautiously optimistic of the U.S. economy. We believe actually the key positive factor for the U.S. economy, we still have a strong labor market as illustrated by the numbers. And we see actually slower inflation growth, although it's still quite high against the Fed indicators. And we see relatively solid financial conditions of households and companies compared with the global financial crisis back in 2008. And we see the Chinese economy and the rest of the world is reopening, and that will be a positive indicator to the US market. And again, another quite important thing actually is the relative weaker of US dollar, as Mr. Zhang mentioned. Also, another positive indicator will be the improving global supply chain conditions actually compared with the past 2 years. Still, we see some kind of negative indicators. Some of them are, for example, the weak economic data, the continuous tightening of the monetary policy. We also see the falling leading economic indicators and falling consumer confidence index. And also, we are not so sure whether there will be some geopolitical black swans in the coming months or years. And also, seems to be the global economy seems to be still slowing down. So at this stage, we are not so sure where it's going, but still we are cautiously optimistic about a soft landing, maybe in the 2023.
Great answer. Great insight. Thank you very much, Mr. Hu. And finally, let me go to Mr. Yao. Mr. Yao, what would be your piece of advice for a Chinese business that wants to go global now? Mr. Yao?
I think.
Yes.
Yeah. Okay, thank you. Yes. So I think now it is the opportunity for a Chinese company to go abroad because now China has restarted international travel. So we especially for the company with the foreign trade business, they can grasp the opportunity now and to join the trade exhibitions. So, for example, I know now in mainly the local government encourage the companies to go abroad to attend the international trade exhibition because this year is very critically important for the Chinese exporting companies, and know, for example, in Jiangsu province, the government will arrange around the 0.7 billion Chinese yuan to support the Chinese for the local companies to join the international trade exhibition. So actually, the main task of our organization is to help and organize the Chinese company to join the international trade shows. So the obtain the order is the keywords for the Chinese company, and because we should to keep the supply chain security and resilience. So this is my observation. Thank you.
That's a good piece of advice. And my final question goes to Mr. Zhang Ning. Mr. Zhang, what role do you think China's economic rebound in 2023 play in the global economy, which is predicted facing a recession?
Thank you, Lily. So basically, we see maybe at least 4 channels. The first one, of course, China is a very big market for the rest of the world. So last year, China's imports was around $2.7 trillion. So which means if China's economy is recovering, the imports is still, not as bad as exports. So I believe, that will be good for many other economies. For example, in most of the Asian countries, including the ASEAN countries, the Taiwan region, and etc. China's their export to China accounted for around 30%, 40% of their total exports, which is very meaningful for their business, their economy. So that's first one. So China's economy is less bad and even picking up. The imports could stay at least resilient. That's good. And number 2 here is service trading. Service trading from China, which means Chinese households, they finally can travel abroad. And previously, Chinese travelers accounted for maybe 1/3 or even one half of the total foreign travelers in Thailand, in Japan, and even in Korea. And so far, that's just in the early stage of the picking up, right? And if you look at the data, during the Chinese New Year, 7-day holidays, China's foreign travelers, traveling overseas, totaled around 1.4 million, which is more than double from 1 year ago, but only 20% of the pre-COVID normal level. You can imagine how large the potential could be. So that's number 2, especially for traveling, tourism, transportation, education, etc. So that's why from the global investors' perspective, not only looking at China's reopening, but also looking at the so-called beneficiaries from China's reopening. That would include the consumption power for Thailand, for some so-called tourism avenues, but also for maybe potential boost from investment, Australia, etc. So that's very interesting to see. That's number 2. And number 3 here could be the global supply chain. So China has been super outstanding in the past 3 years in terms of resilient supply chain, the decent and flexible capacity in production, etc. It will continue. So that will explain a lot. Even with China's strong domestic demand, that will be positive for the rest of the world because they are part of the China's supply chain. China imports something as a component for China's so-called local production, which will be also positive for other economies, but not as much as the direct, imports and exports. And lastly, that's about, I believe eventually China now is offering a very good uptrend of potentials for many global investors. So they can trade China versus others. And apart from the economic returns, even from the investment returns, there will be a make difference. So that's also important for global investors.
Oh, great stuff, great insights. Thank you so much, gentlemen. I think we could go on forever if we keep on talking about these topics. But that's all the time we have for today. Thank you so much for your great insights and your time. Let me introduce them again. That was Mr. Yao Xing, Secretary General of CCPIT Commercial Sub-council, Mr. Hu Wei, President and CEO of Bank of China USA and Chairman of the China General Chamber of Commerce USA, and also Mr. Zhang Ning, Senior China Economist at UBS. Thank you so much, gentlemen, for your time and your great insights again, and happy weekend to you all. Well, ladies and gentlemen, with that, I'm wrapping up this edition of Econ Talk Kickstart 2023. I'm Lily Lu in Beijing. Till next time, bye for now.